This week, it's our Security Money Show, where we'll review the Security Weekly 25 Index and all the financial updates for both the public and private security markets. In the Leadership and Communications section, the 3 stages of adapting to a crisis, build a culture that aligns to people's values, stop, start, defer, how companies are navigating technology spend in a crisis, and more. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. With over half of enterprise security budgets going towards detection and response in 2020, the challenge is investing in solutions that can migrate and scale with your business. ExtraHop helps security teams spot threats up to 95% faster and respond 60% more efficiently in hybrid and multi-cloud environments with cloud-native network detection and response. Kick the tires in the full product demo at securityweekly.com/ExtraHop. The question is simple. Have any of the systems on my network been compromised? The answer is harder than it should be. Enter AI Hunter. Active Countermeasures has automated and streamlined techniques used by the best pen testers and threat hunters in the industry to create AI Hunter, a network threat hunting solution that does the first pass of a hunt for you to identify systems that are most likely to be compromised and scores the results on a scale from 0 to 100. You can then research those systems in depth with AI Hunter. Focus your valuable time on the systems that need your expertise with AI Hunter. Sign up for a personal demo today at securityweekly.com/ACM.
Welcome to Business Security Weekly. This is episode number 169, recorded April 13th, 2020. I am your host, Matt Alderman, here in a snowy Colorado. Yes, it's the day after Easter, but it's been snowing for 2 days. Joining me from G-Unit Studios in Rhode Island is my co-host, Mr. Paul Asadorian.
Hey, Matt, good to be here.
I hear it's raining in Rhode Island and
a lot
windy,
of rain
but no
today.
snow.
Yeah, it's supposed to be really windy today, too.
That's what I heard. So hopefully we don't have any power outages during the show.
We hope not.
Otherwise, we'll have to do it over again.
Yep.
Is your open source code secure? Learn how to verify your code during development, not after the build, in our next webcast with Synopsys. That'll be this week. Register for our upcoming webcast or virtual trainings by visiting securityweekly.com/webcast. You can also access our on-demand library of previously recorded webcasts and virtual trainings by visiting securityweekly.com/on-demand. Each webcast will earn you 1 CPE credit that we will submit on your behalf if you provide us your ISC squared number. It's a good time to get caught up on your CPE credits for the year while you're working remotely from home. Also, we have officially migrated our mailing list back to our original platform. What a pain. And anybody who wants to understand what a mail migration, what you should and shouldn't do in a mail migration, glad to share. We've got all of our categories nailed down, but I'm not sure we got all of our listeners back on the right list. So if you're getting extra emails from us, I apologize. If you're not getting them, I also apologize, which means you probably didn't get back on the new list. But you can go to securityweekly.com/subscribe, click the button to join the list, sign up for what you're interested in. That way we can notify you of interest topics so we can send you webcasts, virtual trainings, and eventually other materials that meet your desired categories.
Yeah, and it'll get better. We're working on a user portal site, which is coming along, so that'll make it easier for folks too.
Yeah, once we get the member site up, all those interests come over, and then we'll start to filter by that, make it a lot easier to find our content for those people that sign up. We're just still working through some of the back-end plumbing and get it all set for you guys. This is my favorite segment. We do this once a quarter. It's a great opportunity, Paul, for me to just sit down and look at all this.
Where we should have bought when the market was down, because that's what I'm looking at.
Well, it was funny because I got an email this week or last week from a listener saying, look, I'm starting to look at the market. I'm curious what your Security Weekly Index 25 looks like. And I said, hey, by the way, we're doing that show on Monday. So here it is. But it gives me an opportunity to really sit down and look at all the companies in our space that are public kind of see how they performed over the previous quarter. I went a little deeper this time, Paul, because of that question. I said, well, maybe I should look at a couple companies and see who is in a position to potentially outperform over the next few quarters as we get through this crisis. Because as you can imagine, the index is way down.
Yeah, you see the big
all
dip
the markets.
There.
Yeah,
and
all
it's
the
interesting how
markets
security trended the NASDAQ as it tends to do.
Yeah, it does. Yeah, I mean, it's a pretty close mirror to the NASDAQ. What I think is interesting, though, is that the NASDAQ has still outperformed the Security Weekly 25 index.
Right.
The NASDAQ is sitting at about 22.88% growth since I started this. It's down from last quarter. Everything's down.
Right.
But the Security Weekly
index... But you can't invest in all the stocks in the NASDAQ, can you? Is there a fund or does it must do like a sampling of it, right?
I think there's an ETF that allows you to invest in the NASDAQ. So there's probably an ETF.
What's an ETF?
It's an electronically traded fund.
Yeah, okay.
So there are different funds for different areas. There's also index-based funds. So like you could invest in like the S&P 500 index. I'm pretty sure there's one for the NASDAQ. So yeah, you could invest, and it kind of mirrors what's in the NASDAQ. So you'd see similar performance.
I guess what I'm getting is you want a more, it depends on what you're after, right? I mean, there's always the short sales and going after specific security companies because you have that knowledge, which is something I've always wanted to do, but I've always been too nervous to do it, right? Then there's, I know technology companies, maybe I could put together my own, portfolio. I think the hesitation for me personally is the amount of time you need to monitor that, right? Because you really, I mean, unless you've got someone working with you that can help you pick and set it and forget it, a lot of what we're talking about in individual companies or your own portfolios, you got to keep tabs on fairly regularly, I would imagine, right?
Yeah, you've got to watch all the earnings announcements, and we'll get into some of the announcements and who did well and who did bad. But you're right; you have to stay on top of it.
Oh, so yeah, you could do your own. Sorry, but you could do your own security one, provided you were on top of all the earnings announcements for all the security companies.
Yes.
Yeah, that might not be a bad idea. And then you basically got to move it around, right, based on earnings predictions and all that stuff, right?
Yeah, I do it after the fact. So I get this really interesting post look at all the earnings. But if you were going to manage this index fund, you would probably want to make different investments and change things around because the Security Weekly 25 index has only performed at 0.41% compared to 22.88% with the NASDAQ.
Right.
So it's not performing as well.
Right.
There's times when the security index outperforms the NASDAQ. But when we're in down markets, what I see in the data I've been analyzing since July of 2018 is that when the market's down, the index, our Security Weekly index suffers more than a broader like NASDAQ market.
So that tells me that there's different verticals within security in companies that are performing better than others, obviously.
Correct.
Right? And you need to keep tabs on that. So I don't want our listeners to go, I'm going to invest in the Security Weekly 25, make a whole bunch of money. It doesn't work like that.
It doesn't work that way. And I'll get into some of the nuances of it because when I do this, I see the numbers, right? And I track all the history and you'll see some trends. You'll see some interesting trends over this time period. So let me just give some quick recap, right? Revenue beat by 0.65%. That's not a lot, right? I mean, the revenue numbers were pretty flat in Q1 of this year, and that was reflecting Q4 of last year.
I see. So the analyst predicted higher growth. Oh, that's what they predicted was that 6%?
Yeah.
I see.
That point. But I mean, basically revenue was in line with expectations. There were no major surprises as a whole in the index. Now, individual companies had surprises, both up and down, which I'll get into. But as a whole, it stayed pretty. It was pretty in line. Earnings did beat by 21.69% on average. That again, it's down from last quarter, but you saw some really interesting, impressive earnings beats. Now, what is revenue versus earnings, right? So revenue is sales, top line, how much money you bring in. Earning is how much money is left after your costs, right? And so when you see an earnings beat, that's usually pretty positive because it means the company is controlling its costs, its expense, and therefore their earnings are higher than what was predicted.
And that was for Q1 2020?
Yeah, but it reflects the Q4
Oh, okay. So we're still like a quarter
numbers.
behind. Yeah.
Yeah. And Q4 is typically, just like technology companies, Q4 is typically the biggest quarter for security companies
Mm-hmm.
because it's the end of the year. You see that end of year spending. So almost all security companies see their biggest quarter in Q4. So it's a interesting indicator when we start to think about the earnings calls that will start happening this quarter for
For
Q1.
Q1, right. Okay.
Right. Mm-hmm.
I learned so
And
much in these
before
segments.
the downturn.
I, I learned so much in the last segment, and I'm applying it here. It's fun. I'm sure our audience is doing the same thing. It's great.
It's a lot of fun. So the other thing I track is overall analyst ratings. Like, how is the market rated
Mm-hmm.
from a buy, sell, hold perspective? It's a weaker buy. It's almost a hold. It's pretty much in line with what it was last quarter when I did these results. But here's some of the best rated stocks, which are interesting, right? Verint is the highest rated stock, but Verint has been on a down, it's kind of been a worse performer, and it's a worse performer again.
Mm-hmm.
So the analysts are taking into account that it's performed pretty badly over the last couple quarters and thinks that it has a turnaround play.
Has room to grow up. Yeah.
You're right. But the other two companies that are best rated are Rapid7 and Ping Identity. Yeah, and both of these companies have actually done pretty well in the last couple quarters of reporting. Rapid7 has gone from negative earnings to positive earnings over the past couple quarters, really started to put profitability into the model. Ping, when they came out of IPO, has had a couple good consecutive quarter announcements. So they're rated very, very well by the analysts. Those that aren't rated very well, SecureWorks has been here a couple times. For some reason, the analysts don't like the SecureWorks model. You know, they're a managed security service provider. A lot of people probably means not a lot of profitability or potential valuation improvement in that kind of business, and it has never been rated really well by the analysts. But then you've got NetScout and Checkpoint also kind of in this worst rated list, which is interesting. We'll talk about NetScout in a little bit because they were acquired, but they're still trading in the public marketplace. That could change next quarter, though, once this acquisition goes through.
Interesting.
Yeah. Best performers, CrowdStrike has done extremely well. I think the stock jumped something like $10 in one day after their announcement. Just yeah, I should have bought that one when it was down.
I know.
Yep.
I think we all wish we had bought CrowdStrike, but you don't. You know, you don't have a crystal ball.
Yeah, of course. I'll tell you another one I wish I would have bought. Let me finish this first, though. Worst performers, Verint. Like I said, they've been a couple quarters in a row. Then Forescout and Palo Alto. Palo Alto actually missed on the revenue side last quarter, which was really interesting. You know,
and
Palo
that really
Alto
hurts the stock when they miss their earnings.
It does.
Yeah,
it does. The other one, you know, CrowdStrike was one. You kind of saw it at its low, and you're like, oh, I wish I would have gotten that. The other one, Qualys. Qualys was down to 70. Really? Today, it's trading at like 101.
Wow.
Yeah.
Did they miss their earnings or something to go down to 70?
No, 70 was part of the whole correction.
Yep.
When the whole market corrected due to the environment that we're in with COVID-19, all the markets corrected. And Qualys got down to about $70 a share. And I was really looking at it because Qualys has been profitable from day one since they entered the IPO, when they went IPO. And I was like, ooh, it's getting close. But I wanted to see, did the market really hit the bottom or not? This was a few weeks back. Since then, that stock has gone from 70 to 100.
Wow.
And the news out, there's not a ton of news. I mean, they've done some interesting stuff with VMDR. They have a lot of profitability. They're a cloud-based company. But somebody's liking them right now in this environment because their stock has gone gangbusters lately.
That's interesting.
Yeah. The only M&A was the Forescout by Advent International and Crosspoint Capital for $1.8 billion. Like I said, they're still trading in the public market. I expect that to stop at some point, probably once this whole acquisition's finalized. They will come out of the market, which means I will have to replace them, similar to what I had to do with replacing Sophos when they got acquired as well. All right, so here's some strong upsides. So when I did my analysis, my analyst ratings this time, I looked at not only the ratings and how they were rated for buy, sell, and hold. I wanted to see what the potential upside was. And I've got about 6 companies here that have really, really strong upside potential. And I'll kind of let everybody know who they are. And then I said, based on that list, if I were a guy that was investing in these stocks, which ones would I kind of tend towards? Not a recommendation, but I have some interesting views on a couple of these companies that I think would be a buy at this point based on where their stock's sitting right now in the current environment. So here's the list of strong upside companies. Mimecast at 69.24% upside based on its current stock to where the analysts think that stock could go. That's the highest upside available. FireEye is 68.23% upside. Rapid7, which we just talked about a little bit, 53.76. Tenable sitting at 48.56. SailPoint, 47.16%. CyberArk at 46.76%, and Verint is 42.94%. Now that is based on their current stock price and their target price. What is the potential upside? So any guesses, Paul, who I might think about in this environment?
Rapid7.
I think Rapid7's good. My only concern with Rapid7 is that a lot of their traditional business requires some on-prem capability. So I looked at the guys that would benefit in a remote workforce environment. And that's where I think people like Mimecast with email security, SailPoint and CyberArk that are still managing credentials and identities, whether remote or not.
Yeah, those become more important with more remote, which we're going to see, I think, is a continuing trend even after all the dust settles.
Right. So I kind of highlighted those 3 because I think they benefit in the near term and the longer term with the environment that we're in and that I think we will continue to move to. Where
So you see the overall IT market, right, trending towards these organizations are going to realize that folks can work from home and be productive, right? Is that the general sense when we talk to people?
Yeah. And I've got an article in the next segment that actually talks about, they did a survey of CFOs, and we'll talk about this in the next segment. 3 out of 4 of those CFOs see at least 5% of their workforce staying remote.
Now, that's interesting from a stock market perspective as to where you might be investing today. That's going to shift because that's going to have a negative impact potentially on things like property, real estate, office space companies, I don't know, things like that, right?
Yeah, you think about the WeWorks of the world that maybe see not a return of same capacity in that environment. Property management companies, the big real estate REITs and those sorts of things, all could potentially see an impact from the environment we're in when you think broader market dynamics, right? Obviously, this was more focused on the security folks, but people like a Mimecast and a CyberArk and a SailPoint are going to continue to benefit in a remote or on-prem world where a FireEye, a Rapid7, or a Tenable could potentially see some downticks in the near term. My guess is it will recover for all those companies. I'm just thinking it will have some impact to them, both short and longer term.
It's interesting.
Yeah. I also track all the public markets. I have data through February. Problem is, did this segment a little early, so I don't have March. Plus, the whole remote environment, the whole transition we went through in March, I think the March report's going to come out pretty late anyways, because I just got February's like 2 weeks ago. So we definitely have seen some impact. But I like to track where funding is, what's happening on the private M&A side as well. Just because I want to see kind of the overall strength to the VC and the private equity markets and how it impacts our industry. Some big funding rounds in Q1 and both in January, February. So Netscope, $340 million, Series G. OneTrust took in $210 million, Series B, and I think their A was pretty big. It was like 70 or 100 million, I think. So that's a big follow on. SentinelOne took $200 million right before RSA conference. That was one of the news items that broke before RSA conference. Sneak, who's a sponsor, took $150 million. ZeroFox, $74 million. Sysdig, $70 million. And then our Automox buddies took $30 million in a Series B, all in Q1.
Yeah, Netscope has the potential to see some growth. I mean, they've been a pretty well funded and growing company because they're in that remote access arena.
Right.
Their messaging is kind of, they've got a lot of products, and they talk about CASBs and alphabet soup. CASB, SWG, DLP, Next Gen SWG, whatever. I don't know what that means. But when you dig into what they do, their ability to provide users access remotely is pretty cool.
Yeah, and remote is where we are right now.
Mm-hmm.
ZeroFox doing a lot on the social media front, probably benefits in this environment with a lot more social media. We've seen a lot of attacks coming after both email and social media in this environment. So those types of solutions are definitely getting some strong play right now. Automox can patch from anywhere. So, having a cloud-based service that can patch devices, whether they're on-prem or remote at home, is a great solution in this environment as well.
Mm-hmm.
A couple acquisitions, couple big ones. RSA, we covered this. RSA Security spun out from Dell by STG for $2.1 billion. That was also a really big announcement right before RSA conference this year. We already talked about Forescout probably will come out of the index once they stop trading publicly. And then the other big one was Armis, the Armis acquisition by Insight Venture Partners for $1.1 billion.
Yep.
All deals that happened before COVID-19 kicked in. So we might see a little bit of a slowdown. We did see some news last week. CloudNeedy got acquired by Zscaler last week. So there are still deals happening. It'll be interesting next quarter to see how much this slows down during this period.
Mm-hmm. If at all.
Yeah, let's hope not. The only, I was thinking about hot startups. I look at some of the companies we look at, some of the briefings that you've done. Nobody really came to mind as kind of that next wave of really interesting technology. Did you see any last quarter, Paul?
No, not really. And I was expecting a lot more buzz about breach and attack simulation, which I think is super important. I do see a lot of Kubernetes, traction and buzz surrounding that. Of course, there's a lot of caveats with both those. I think both those require a mindset change in IT and development and operations, right? And I think you're going to see that slowly over the course of the year. I was hoping for more of a, I think COVID-19 kind of put refocus on a lot of IT teams, right? And now I think maybe coming out of that, they're hopefully going to refocus on those things that are important to doing business in this newer technology, right? And I think on the dev side, it's certainly Kubernetes. And on the IT side, I think it's breach and attack simulation and that kind of stuff.
Yeah, we did a really interesting segment earlier today on Application Security Weekly around Kubernetes. It was interesting because I asked about some of the vendors and are they providing really good value. There's a lot of capabilities in Kubernetes, Paul.
Yeah.
But it's really hard to understand how to set all the little knobs and tweak all those configurations. And the commercial vendors potentially simplify it, but one of the potential concerns was, does it also remove some capabilities that are in Kubernetes because the commercial guys can only use certain functionality? Anyway, it was an interesting segment. It'll be interesting to see how the Kubernetes things play out after we get out of this environment. But I agree with you. We've seen a lot of startups going after Kubernetes security in the last quarter or so. Yeah. All right. That's all I have for this segment. We'll take a quick break, and then we'll cover the leadership and communications articles for this week.